Alright, this is video number 2. I basically recorded the video, but I had my mic muted the whole time. Alright, so you can see the PNL, we lost basically 1.317.70, so almost 2% today, 2.5 almost basically, and we're gonna go over the trades. The account balance, this is a new account I just started, and I have been working honestly, and I have not been able to trade, and today, the emotions got the best of me. Just trying to put more size, trying to rush the process, when in reality that should not be the case. And I'm gonna go over the trades because I basically went over it, and so at first we took MES. I'm gonna show you the first trade on MES, and this was the first trade right here off of this inversion fair value gap right here. This was the first trade on the 3-minute. You see, as soon as we had that 9:30 opening, I kind of waited for another candle to open to see if we're really going to start to push up. We opened up, I bought, and then we got stopped out down here. That was the first trade. Boom. And then for ES, we just got super emotional, and we took this BPR trade right here. So at first we had a market buy, then I canceled it out because I didn't mean to. When I was clicking here, market buy, I wanted to set limit orders, and then eventually I set a limit order at the this fair value gap right here, and then at the BPR mean threshold, or consequent correction, and then eventually you can see we got stopped out with this candle right here. We opened up, we got stopped out, and that was basically the 2% L right there on that one. And I'm gonna go over what happened basically. So yeah, we're gonna go over this basically. I'm gonna go over it with y'all. So this is kind of what happened here. We were emotionally trading. We didn't wait for the opening range gap or 9:30 to 10 a.m. to occur. We didn't wait for that. No 15-minute confluence. We did have one, but it got disrespected, so then we could have waited for another one. And I wasn't sticking to my model also, and the S&P correlation wasn't really there. So yeah, we didn't wait for 9:30 opening or 9:30 to 10 a.m. to then eventually go for the silver bullet. We didn't also have any S&P correlation that was really strong and viable here. So we're going to go next to NQ. You can see NQ did drop a lot lower than ES, so that's kind of why we chose ES as a stronger one to buy or trade. So on the 12H we had a market maker buy model. Clear looks bullish, and then on the 4 hour we had 4 hours CRT there, as you can see that there. We had 4 hours CRT, that's kind of what another bias was. And then on the 1 hour we had a 1 hour bullish inversion fair value gap, which was holding with the mean threshold of that order block. And then we also had CRT on the 1H form right there, so we could have waited for that advanced CRT to form, or the confirmational one. Either one would have worked honestly, and then you can see the buy side objective was met. On the 30-minute we also had that, we had another CRT, and then on the 15-minute we had a change in the state of delivery right here with that candle, or the manipulation. After we swept the low, this change in the state of delivery came back, retested it, and we eventually started to expand higher. Here we should have waited for the 15-minute confluence. This was our 15-minute confluence at first whenever we took the trade, but it got disrespected. You can see we closed below, and at 9:30 we closed below. We should have just stepped away. We should have not taken those lower time frame trades, because again, if we have a lower time frame trade idea and is not being backed up by an intermediate term time frame or time frame alignment, for me, I just don't trade it. I don't know if y'all trade it, but for me personally, I just wouldn't trade it, because I just don't have enough conviction with the confluences that are giving that trade idea more power. It just isn't aligning for me, and I just don't feel enough conviction. And it just, majority of the time when I take trades like this, it just doesn't work out unless we have a higher time frame confluence, or the market is just simply moving up higher. It's not range bound like this, like it was at first. And we could have waited for this right here, or we could have waited for that 1 hour CRT or the 30-minute CRT confirmational candle right there to form, to then open power 3, move lower, enter at the manipulation of that third candle, and then eventually start to catch the move up higher. That would have been more viable. That would have been better. That just would have been overall better. On the 3-minute here, there was also another entry. So we used the breaker or the inversion model too. So this was the inversion model, and then you can see we had displacement, and that was entry 1. The BPR 1. The BPR 1 was another one, since we did also sweep that. We swept that low right there, and then once we closed above, to me this looks strong, but the 15, it didn't give us that strong indication from the 15-minute candle. So again, that wasn't strong at all. But the second entry was strong to me, because we had a BPR, and we also had that breaker form. To me, that looked really strong. I used my standard deviations. I was like, all right, we're probably gonna reach that major buy set up there. We're really close to it. We're probably gonna it's likely gonna happen. So then it didn't happen, and I just stepped away. We took that 2% L, and then eventually that 0.5 close to 0.5 L, and I was like, all right, yeah, we gotta step away. This would have been the second best entry right here. This is your unicorn model. Down here you can see that there we had the fair value gap right there form, that buy side imbalance. Then we also had a bullish breaker form. So again, these two confluences are aligning perfectly. You have a fair value gap breaker model there. Anything tapping up into it would have been the perfect entry. Stops at the low down here. Stops at the low, you can see this is basically a 2R, and if you target standard deviations, you probably get a 2R, if I'm being truly honest. Yeah, this would have been like a 1.6, that's TP1. This would have been TP2. And it's very, 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 very close. And I do see it happening probably tomorrow, maybe later tonight. But either way, I would just probably been aiming for 1 to 2. And yeah, this would have been, the other more risky entry. This is the more entry, the calm one, where you're like, it's gonna go up there, and you just gotta have patience. And as soon as this happened right here, that change in the state right there, it's gonna hold. It's gonna go and push up higher, but you don't know how long it's gonna take. That's kind of the thing too. And yeah, really just in a very emotional trade. It just wasn't really one that was really like strategic at all. Not waiting for my rules, not following my system. So I'm gonna go review, reflect, and refine my system, add protocols to not let this happen again, work on my risk management procedures, and just really do a deep reflection upon the risk parameters I have to have, and like just like the system in general. Like I got to do a deep reflection of the trades I've taken in 2024, what worked, what didn't work, how can we implement it into this 2025 system, and what can we do to become a better trader in 2025. That's all really I'm going to be doing from the notes, the analysis, the data that I have from 2025, and we're going to implement it into this 2025 one. Again, this is from Tom Trades, his journal. I'm going to basically use this table. I'm not going to take it off after. I'm going to just simply have it for the rest of 2025, no matter what combines I'm trading. If I'm trading combines, express, it doesn't matter. Bad mistake for me, again, being more emotional. And you can see the SMT there, London lows both being met, but ES barely meeting them, or like the super London lows or Asia London switch over, those lows not being met by ES while NQ was. And yeah, just really unviable trade idea in my honest opinion. The daily advanced CRT on the daily forming, we should have just been more aware of what was going on. So here we didn't have CRT on the 15 here for the entry. You can see that there we swept both sides. It really wasn't a CRT here in my honest opinion. If we were using the advance when it wasn't, since we swept the low after and we swept the high during the same candle, not really viable. We should have been waiting for either one. And again, even after that candle, the same thing happened, so just not viable. 3 minute was an inversion, but I wouldn't classify it as CRT. So it was simply just an IFEG. It was simply an IFEG model, which wasn't viable. This one was a advanced unicorn model entry, since we had the breaker and the fair value gap, but it just didn't work out because we didn't have anything on the 15 there also. So we had the 15-minute buy side imbalance, which got disrespected, met the lows. 30-minute, we did have that order block, but we didn't have confirmational, to give us that clear confirmation that we're likely going to reverse. And this is another thing why I use CRT as more of a confirmation tool, to give me the indication that, okay, we're likely to push up higher now. We're likely to follow my higher time frame, which is like the 4 hour and the 1 hour, because it gives me a confirmation. That's why I use CRT. I don't use CRT to trade it or as an entry model or pattern. I use it to give me confirmation, because it does work. I'm not going to lie, it does work. You just have to understand how it works and how you can implement it and use it correctly, because every CRT is not going to be working. You have to have narrative behind it. You have to have time protocols, and you have to use, other things to make that model more high probability. And that's another reason why you want to journal. You want to journal because you build your edge through journaling. You're able to see what works, what doesn't work. You're able to reflect upon what you need to implement, what you need to take out. And that's basically really it on what I plan on doing. For 2025. This month is coming to an end. Hopefully, we're able to bring it back up to break even in a couple of weeks. If not, then just simply lose it. If I'm not really in a rush anymore, even though I'm not really trying to rush the process anymore. I have crypto I'm worrying about. This can be FX firms I'm worrying, or this can be the prop firms I'm worrying about, but I mainly focus on crypto. So I don't know why I'm trying to rush it. The more you rush, the less likely you are to get there. There's no point in rushing, so yeah.